Well, hello everyone and welcome to Moementum channel. My name is Mo, and in this video, I'm going to be walking you over the latest update with the portfolio that my wife and I have. It's a portfolio investing in the stock market passively through the high quality index funds. It's currently consisting of only 3 ETFs. Before I dive into the video, you might be noticing how I'm rocking this beautifully done hoodie sweater. Yes, it's in fact one from Blossom. This morning I got this care package from Blossom and I'm super excited to be wearing it today. Thank you so much, Brandon, Max, and the entire ambassador teams. It's such a pleasure being part of the Blossom team. Ever since I've joined Blossom and been using the app, I'm absolutely loving all the interaction that I have with so many amazing investors, Canadian investors, such as yourself who are watching this video right now. Thank you for all the sharing, for all the knowledge, wisdom, and knowledge that you share and impart on the app. All the questions that you ask, I think it's truly those interaction and those presence and engagements on the app are what makes a Blossom app so special and so unique. All right, here's a quick look into the portfolio that we have with Blossom. You do notice that currently we have the highest amount in terms of the portfolio size and value ever reported on my channel or any of my videos, currently sitting just shy of $541,000. Today, our portfolio was up by 0.26% or about $1,400. If you look at our all-time return for the entire portfolio that we have, it's up by 3.20%. We have changed our portfolio approach several times, and in only 2023, early 2023, we kind of landed on that approach of passive investing through index fund. And we are sticking to it for the long term. We are very happy that we have currently 3 funds in our portfolio from my wife and I. Our largest holding is 𝗋𝐻𝐈𝐿. And in a moment, I will touch on that, why this is our largest holding and why we are sticking to it. We currently have over 18,000 shares of 𝗋𝐻𝐈𝐿 in our portfolio, which is up by just about 3%. Our next big holding is shares of VTI. VTI is indeed Vanguard Total Stock Market Index Fund ETF. It gives us exposure 100% to the US stock market. It's available in US dollars, and that's why we hold it in our RSP account. With VTI, shares are up by 7%. And lastly, we have 151 shares of VT, which is another Vanguard product, Vanguard Total World Stock Index Fund ETF. With VT, it's almost the equivalent of 𝗋𝐻𝐈𝐿, but it's available in US dollars, with, of course, less exposure to Canadian markets. It provides us that diversified approach, investing in the stock market as a whole. Our shares of VT are currently up by 4.11%. I'm only keeping shares of VT and VTI in my personal RSP account. For my wife, currently, she has only shares of 𝗋𝐻𝐈𝐿 in both her TFSA and RSP account at this time. I wanted to bring us to your attention as well one of the recent posts that I had on Blossom app. And for those of you who are not currently on Blossom, I highly encourage you to check it out. It's an amazing environment and app for folks to communicate with amazing investors, learn from others, and share your own experiences and ask your questions. Plus, you get to actually track your own portfolio, see where things are at, track your dividend income, track your portfolio, and also share your trades as they happen with other investors. Anyway, going back to the post, there was one recent post that I shared, and it was actually talking about the importance of geographic diversification. It was a snippet, an image from a recent Wealthsimple newsletter, TLDR, offered by Wealthsimple, whereby if you look at it, it talks about how and why geographic diversification is so important. We know the US stock market in the past recent years, like the past 10 to 20 years, has done amazing. It has really outperformed all the other markets and kind of knocked it out of the park. Here in this graph, in this table, you're actually seeing how an equally weighted portfolio tracking all of the major stock indices would have actually beat any singular market over the past 50 odd years. Yes, there are years that US market has done better. Like, for example, if you look at it in the past 2010 and 2020, those were the cases. US consistently were outperforming based on its performance. But if you look at, for example, 1970s, Japan was actually, based on all the markets, was doing better than any other market. 1980s, it was again Japan. 1990s was US. 2000s, it was actually Canada. Oddly, not the highest return, but in fact, compared to any other markets, it was doing way better. And then US took over. That's why having that diversified, index fund or diversified portfolio is really important, because you really cannot predict that which market is gonna perform well. Yes, if you just assume that US is gonna perform better, you might get tempted to always put your money into US stock market, but the truth of the matter is you don't know if it's gonna continue. Is it gonna always be like that? There's no certainty, and that's why I think having a more geographically diversified portfolio is a safer bet, allows you to have less volatility and over a longer period of time, potentially more modest and steady returns, especially for somebody, I think like myself at least, who is trying to invest for the long term with an idea of building that early retirement portfolio. I hope you found this video beneficial and hopefully gave you something of interest, inspired you to start investing in the market. If you have any question, feel free to add those as a comment, whether on Blossom or YouTube. And if you are not already on Blossom, I highly encourage you to do so. Be sure to check out Blossom app using the referral link that I provided in the video description. I would love to see you there and connect with you on there. Thank you, and I hope to see you all next time.